And welcome back to Forex Scope, your go-to channel for insightful Forex analysis and actionable trading signals. Today, we're diving deep into the Australian dollar to Japanese yen, bringing you real-time insights on the 15-minute and 1-minute charts. We'll be looking for potential buying and selling opportunities, and forecasting the future price direction. If you're serious about improving your Forex trading game and catching those upcoming trends, make sure you hit that subscribe button and turn on notifications so you don't miss a single update. Let's get started with our analysis. This support zone is identified by a significant price decline from the 101.625 high to the 100.394 low, indicating a strong buying pressure reversal from lower levels. Several candles within this range exhibit large lower wicks, suggesting that sellers attempted to push the price down but were met with substantial buying interest, preventing further declines. The price then consolidated in a range between 100.394 and 101.270 before attempting to move higher, showing multiple touches and rejections at the lower boundary around 100.394, indicating its strength as a former area of accumulation. This historical price action clearly marks a level where buyers stepped in with considerable force, defending the lower price levels and providing a solid foundation for potential upward movements. The extended period of price testing at this lower bound reinforces its significance as a key support. This resistance zone is identified by a period of intense price action where the AUDJPY struggled to break above the 101.629 high, with multiple candles showing significant upper wicks and indecision. The price attempted to push higher multiple times but was consistently met with selling pressure, indicated by the long upper shadows on the candles. This occurred after a sharp upward movement, suggesting that profit-taking or new short positions were initiated at these elevated price levels. The resistance is clearly defined by the cluster of candles failing to sustain prices above 101.563, demonstrating a strong barrier to further upward momentum. The inability of buyers to overcome this price level, as evidenced by the repeated rejections, signifies a significant point of resistance where sellers are actively defending the market. The price failed to establish a firm foothold above this area, leading to subsequent downward movements, solidifying its role as a key resistance. The resistance zone is identified between 101.556 and 101.568, spanning from timestamp 176.299.6140 to 176.299.6200. This area exhibits strong selling pressure, evidenced by multiple candles failing to break above this level and then retreating significantly. The price action during this period shows a clear struggle to sustain higher prices, with the upper shadows of the candles indicating rejection from this zone. The high price within this timeframe reached 101.568, while the low was 101.522. This indicates a battle between buyers and sellers, with sellers ultimately dominating and pushing the price back down, reinforcing this level as a significant resistance. The presence of several candles interacting with this price range suggests a period of indecision or a strong barrier for upward movement. The relatively high tick volume observed in some of these candles further suggests active trading around this level, potentially indicating institutional interest in defending this resistance. The overall pattern points to a zone where prior buying momentum was met with considerable selling pressure, leading to price reversals. The support zone is identified between 101.091 and 101.105, spanning from timestamp 176.298.8700 to 176.298.8760. This area demonstrates clear buying interest, with prices repeatedly bouncing off this level. The candles within this timeframe show significant lower shadows, indicating that sellers attempted to push the price lower but were met with strong buying pressure, causing the price to rebound. The low price within this timeframe reached 101.074, while the high was 101.105, suggesting a strong floor that prevented further downward movement. The repeated interaction with this price range, particularly the rejection of lower prices, highlights its significance as a support level. The number of touchbacks and the formation of bullish reversal patterns within this zone underscore its strength. The tick volume during these periods also suggests active participation from buyers who stepped in to defend this level. This area represents a zone where demand exceeded supply, halting the downward trend and initiating a potential upward movement. The clear rejection of lower prices reinforces this zone as a crucial support for the AUDJPY pair during this period. The AUDJPY is currently trading near the upper bound of its recent consolidation, which aligns with a key resistance level identified around 101.568. However, the presence of a strong bullish sentiment observed in the 1-minute chart, with prices pushing higher after a brief dip to 101.091, suggests a potential breakout is imminent. The Fibonacci retracement levels, with the primary Fibonacci price point at 101.521 and the second at 101.629, indicate that the market is currently testing resistance levels. The recent strong upward price action from 101.091 to 101.629, coupled with tick volumes showing increased trading activity around these price points, supports a bullish outlook. Bollinger Bands on the 15-minute chart show the price interacting with the upper band, hinting at potential upward momentum. Given the strong upward move from the support zone and the proximity to the Fibonacci extension, we anticipate a test and potential break of the 101.568 resistance. The initial upward push will likely target the 101.550 and 101.565 levels, followed by a retest of the resistance at 101.568. A successful breakout could propel the price towards higher Fibonacci extensions. However, a brief pullback to 101.530 and 101.540 is also possible before the next upward leg. The overall price action and indicator confluence suggest a bullish bias in the short term, with significant upward potential if key resistance levels are breached.